If you had a business during the COVID pandemic, with 3 or more employees, and if I could get you a large chunk of cash that you didn't have to pay back, how quickly would you say yes? If you didn't file for that ERTC tax-free credit, see what you missed. Why is it that we are at the mercy of the IRS, yet often, our CPA doesn't give us all the answers we need? Let me explain. When the PPP loan came out, I don't know if your CPA knows about it or not, but they should have called you about the ERCT first. Did they? The PPP was super simple and super easy, and your CPA probably took a deep breath that they didn't have to go through the complex calculations needed for the Employees Retention Tax Credit, abbreviated as ERTC. Our company specialized solely in ERTC Employee Retention Credit reimbursements. With over 16,000 submissions, we have never had an audit issue. The Worker Retention Tax Credit Score, ERTC, is a refundable tax credit that was introduced under the CARES Act in March 2020 to support companies that were negatively influenced by the COVID-19 pandemic. The ERTC is designed to motivate companies to keep their employees on the payroll, even if they had problems functioning. The ERTC enables qualified companies to assert a credit rating against their payroll tax obligations for a % of the incomes paid to their employees. The credit report quantity amounts to 50% of the qualified earnings paid to an employee member between March 13, 2020, it is essential to keep in mind that these limitations are put on the ERTC credit report for 2020 and also 2021. The policies and qualification criteria might alter in the future, so it's always a good idea to have a ERTC tax expert that can provide the most up-to-date. The Economic Recuperation Credit, ERC, is a critical component of the federal government's COVID-19 alleviation effort. The ERC supplies economic assistance to organizations and also companies encountering unforeseen financial difficulties because of the pandemic, helping them survive during financially difficult times. The ERC is a tax obligation credit score equal to 50% of certified wages, consisting of allocable qualified health plan expenditures, paid by a qualified employer to specific workers throughout the period beginning on March 13, 2020, and ending on December. As an employer, you can have your bookkeeper or accountant definitely fill out an ERTC application on their employer's behalf. However, if you contact a CPA, chances are, whoever your CPA recommends you to, there is a good chance it is going to come back to us. The Employee Retention Tax Obligation Credit is a refundable tax credit that is offered to companies that have been financially impacted by COVID-19. And, if you used their calculations, you would have gotten a watered-down claim for just our revenue loss, when there were many quarters you would have qualified for because we do complex ERTC submissions. Generally, to be qualified, companies should have experienced a decrease in gross receipts of greater than 50% when compared to the same quarter in the previous year. Plus, there are other considerations that qualify that our expert team can review. If your organization fills out the application and fulfills certain standards, your accountant can apply in your place. We recommend that you choose an expert. However, if you contact your accountant or a busy CPA don't have time to learn a very complex submission process like ERTC, it doesn't pay off for them. A watered-down submission might be what you wind up with and you can't amend amends. There is nothing we would or could do to bring up an IRS audit since we have legitimate, licensed CPAs signing off on the payroll 940. We're here to get our clients the max amount, that's why CPAs often defer to us. We are the #1 ERTC submission company in the country with 4 offices nationwide. If you were told you're not approved by your payroll accountant or CPA, you might have been told immaturely. And, if you used their calculations, you would have gotten a watered-down claim for just our revenue. We use legal and accounting CPA firms to get you approved for quarters you might not have lost revenue in case you weren't mandated to shut down. We get you approved for both scenarios, which ultimately results in higher credit. We have real, licensed CPAs signing off on the payroll 941s. Furthermore, it will not cost you any money to find out what your ERTC Employee Retention Credit payout will be. So, who do you go with? We have teams of CPAs and attorneys dedicated solely to achieving positive results for our clients. You'll not find dedication and expertise like this anywhere. Furthermore, it will not cost you any money to find out what your ERTC Employee Retention Credit payout will be. This is actual money that you can spend any way you want and does not have to pay back. This is not a scam. Not everyone uses licensed CPAs and legal teams. We do. Our CPAs sign off and put their license on the line.